We're talking about Chapter 2. We're categorizing costs. What kinds of categorization? What are we talking about? What versus what? Direct labor versus indirect labor. What else? Direct materials versus indirect materials. What else?
Manufacturing overhead.
Manufacturing overhead. Those are all classifications. We're talking about period versus product costs. Today we're also going to be talking about something called variable versus fixed versus mixed costs. There's lots of different ways to classify costs. And the case I want to make on the whole is the reason that we're doing this is that we need to accumulate costs appropriately so we can determine what's in the cost of one unit of product so we know what to sell it for. We know how to ship things to be more competitive. We can make decisions. Maybe we're going to go to a new kind of raw material, but that's going to shift our labor costs. What's that going to do to the overall cost structure? Okay. Can somebody tell me what the difference between a period and a product cost is from an accounting standpoint?
The period cost is where it's like, we can look at more for that.
Period costs go immediately to the what? Period costs go immediately to the P&L. No, not balance sheet. P&L. P&L. Profit and loss, income statement. I pay my rent, it goes to rent expense. But what if I have a rent bill that's part for my warehouse, for my manufacturing, and part for my headquarters, my administrative headquarters? That's both. That's part period and part product. Product costs go straight where? To your balance sheet. And they only transfer over to the P&L when what happens?
You sell them.
When you sell them. Okay, let's do some practice here on categorization, and then we're going to continue our discussion today. Okay, so 2-2, page 54. Exercise 2-2, the PC Works assembles custom computers from components supplied by various manufacturers. Company is very small. Its assembly shop and retail sales store are housed in a single facility in Redmond, Washington. An industrial park. Listed below are some of the costs that are incurred. For each cost, tell me whether it would be classified as direct labor, direct material, manufacturing overhead, selling costs, or an administrative cost. So let's just go around. Who's back there, Jess? The cost of a hard drive installed in the computer, what is that?
Equipment costs?
Well, that's not one of the choices. Direct labor, direct materials, overhead, selling expense, or administrative
The hard
expense?
drive itself or having it put in?
No, the cost of the hard drive.
That would be a direct expense.
A direct what kind? Direct labor or direct material?
Material.
Direct material. How are direct materials different from indirect materials, Jordan?
Direct materials are traceable, easily traceable,
Good.
and indirect are not easily.
That's precisely it. Direct materials are easily traceable. One hard drive, one PC. What's an example of an indirect material? Anybody for a PC? Solder. Great. Okay. Monica, the cost of advertising in the Puget Sound computer user newsletter, whatever it says, newspaper.
It's selling.
Okay, that's a selling expense, isn't it? Good. Where does that show up?
On the administrative costs.
Right, but I mean, what financial, when I say, and let me just back up, sorry, make myself clear. When I ask where does something show up, I mean what financial statement, and the more precise you can be, the better. Not just balance sheet, but current asset section of the balance sheet. Long-term liability section of the balance sheet. That's going to be a selling expense. Okay. Jacob, hi. The wages of employees who assemble computers from components.
I said direct labor.
Okay, why did you choose direct labor versus indirect? What's the diff?
They assembled on the assembly line.
Okay, so what would be like the key words that you were looking at there that helped you ascertain that they were direct?
Employee wages
So it's easily traceable. Here's a human being that's actually taking the components and assembling them. That is directly tied into converting raw materials to finished product, right? Good. I'll give you a chance to get settled, Sherry. Tirsa, we're on 2-2. Number 4, sales commission paid to the company's salespeople. Is it? What is manufacturing overhead? How can you define that? I'm sorry, say that again, hon. Okay. Manufacturing overhead, I'm asking for a definition of it. There's 3 manufacturing costs, product costs. What are they? Direct materials, direct labor, and manufacturing overhead. So when you define manufacturing overhead, can anybody define that for me? Yeah. No?
Not well.
Okay, so you're not really supposed to define a word using a word, but what you said was correct. It's all your manufacturing costs that aren't direct materials or direct labor. So it's everything that you need to incur in order to manufacture that's not direct materials or direct labor. So these selling commissions, what are they? Is that overhead? Do you want to capture that in your product, or do you want to capture that on your P&L? P&L, the selling cost. Okay, Melanie, next one. Wages of the assembly shop's supervisor. So I'm in the factory, but am I directly working on converting the product? No, so what am I? That's totally overhead. It's a cost that you have to incur to manufacture, but it's not direct labor or direct materials. It's, in fact, indirect labor. And indirect labor is an example of what? Overhead. Very good. Okay. Caleb, number 6. Wage of the company's accountants. Clearly admin. Period cost goes straight to your P&L. Gretchen?
7,
Yes, please.
depreciation on equipment used to test and sample computers.
Yes, ma'am. Where do we put that?
Manufacturing overhead.
So where does that cost go? Every month I make a depreciation entry. Does it?
I don't know.
Overhead. Direct materials, direct labor, and overhead are all examples of what?
Your balance sheet.
Product costs. Where are they captured? On the balance sheet. Where on the balance sheet? Current asset section. And specifically, I gave you 3 inventory accounts. What were they? Raw materials inventory, work in process, and finished goods. Where's that depreciation expense on my factory equipment going to be captured? Is it raw materials inventory? No. Does it need to be put into WIP? Work in process. What's going to be captured in work in process? Direct materials, direct labor, and overhead. What is that depreciation expense? Overhead. Where's it going to be captured? WIP. Huh. Huh. Jeannie, number 8.
Okay, number 8, rent on the facility in the industrial park. That's going to fall into several categories, I imagine.
What did it say? Rent on the facility in the industrial park. And my facility's part admin and part manufacturing?
Right.
Right? Okay, so
Right.
go ahead.
So then that would be part manufacturing overhead and part admin.
Part admin expense straight to the P&L. Could be, I mean, if you allocate like between your admin staff, your selling staff, it might, but for our simple purposes in here, part of it's going to go straight to your P&L, part of it's going to go, and they say here, they do say here that you're going to probably split it up between manufacturing, selling, and admin, And you're gonna have some sort of square foot allocation that you're gonna get a ratio off of, right? 2-3. Suppose you've been given a summer job as an intern at Isaac Air Cams, a company that manufactures sophisticated spy cameras for remote-controlled military recon aircraft. The company, privately owned, has approached a bank for a loan to help finance its growth, and the bank wants financial statements to approve the loan. You've been asked to help prepare the financial statements, and they want to know if it's a product or period cost. We should be able to go through this pretty quick. Sarah, depreciation on salesperson's cars. Really? That's an overhead cost? Jess?
It's a period cost because it is the salespeople.
It's salespeople. Sarah, if it was depreciation on your factory supervisor's car,
Is the direct labor and excess?
that's not the question. The question is this cost necessary to manufacture the product? No, they're selling it. Therefore, it's not overhead. Therefore, it's not product. Okay, Perry, just read them and tell me what you got.
Rent on equipment used in the factory, product cost.
Clearly a product cost, manufacturing overhead. Heather. Hannah, sorry. So what kind of, is that an overhead item? Lubricants on the machines. No, you're fine. I just want you to, when I question you, doesn't mean you're wrong. It means I want you to tell me why you chose that. Why did you think that it was a product cost?
I thought it was kind of related to direct materials, but it's kind of indirect.
It can't be both. It's got to be one or the other. No, this isn't even working. Sorry. That makes me a little crazy, the technology issues. So this is indirect materials, which is an item under what? Manufacturing overhead. Sorry? Nobody had a comment? Okay. Yeah, so it's an item of manufacturing overhead. It's indirect materials. Okay, Jess?
Salaries of personnel who work in the finished goods warehouse, I said that was a product cost?
Salaries of personnel who work in finished goods warehouse.
They're not
Admin,
indirect
labor under overhead.
That might be a period cost?
I think, and we have to have some cutoff in our mind, when a product has gone through final QC and becomes finished goods, everything from that point on is going to go onto the P&L because you're done with production.
So then it becomes a period cost?
Then it becomes a period cost. So we have to have that split up in our mind. So we go through, we produce our Recon spy cameras. They go through quality control, and then they get what? Probably bubble wrapped and packaged and, da-da-da-da-da. Those, from that on, the product is done, isn't it? So those are going to become period costs. The cost of selling them, the cost of transporting them to wherever the client is, those are all going to become period costs because I'm done producing it. Soap and paper towels used by factory workers. That's no. Why? What's the key word in there?
Factory workers.
Factory workers. Any supplies in the factory?
But they would be okay without it if
Well,
they were doing, if they're
okay.
manufacturing the machines, and it's after the end of their shift.
So let's not overthink this. The supplies are in the factory. The people that are working in there are converting the raw materials into finished goods. So it's a product cost. Good. Monica. Factory supervisor salaries. Product cost, that's clear. Direct or indirect labor? No, indirect.
Because they're supervising.
They're supervising, good. Heat, water, and power consumed in the factory.
I put that between period and product.
So here's the issue. If it says factory, it's all what? Product. If it says facility, and your facility is part factory and part headquarters, then it's both.
So
Just product. Good. Sure. Okay, and again, the example I just came rolled off the QC line. Everything that goes into it now is what? Period. It's going to be called like a delivery cost or a shipping cost or expense, excuse me, and it's going to go right under your P&L. Tirsa? Clearly, period, goes straight to the P&L. No? Because it said for factory, is it a direct materials, direct labor, or overhead? It's overhead. The benefits do not go into the direct labor category. Yeah.
Depreciation on chairs and tables in the factory lunchroom, again, in the factory.
Because it said factory, that's your tip-off. Jeannie? Or Gretchen?
Wages for receptionist period, because receptionist admin.
Yep, admin. And then I'm just going to buzz through these because we need to keep moving. Corporate jets used by executives, clearly admin. Renting rooms for the sales conference, clearly selling, therefore both of those are period costs. And then the cost of packaging the company's product, I don't agree here. We got to stay consistent one way or the other. In the last one, we had the, where were we boxing them? Number 8, we were boxing. We've got to stay consistent. I can't, for some reason, can't write it all on the board today. But that should be in the product cost. We're calling anything post-QC, quality control, we're calling period costs, right? Okay. So, not really sure why I can't write. I don't want to go through these PowerPoints. I want to write, but that's not happening. So, okay, so let's continue our dialogue about classifications of costs. No, you don't need to turn this in. You're gonna do all the rest of the practice problems, please, for Wednesday. The rest of the practice problems for Wednesday. Okay, where am I here? I think basically we left off here. And again, this is not my style to just sit up here and show you PowerPoints because you can do this on your own, but this is what we have today. So just to wrap this up, product costs. If I asked you what are product costs, you're going to tell me they're direct materials, direct labor, and manufacturing overhead. And if I say to you where are they captured, you're going to tell me inventory. And I've even given you a little peek. Let's go through one more time the 3 inventory accounts. Raw materials, work in process, which can you define that?
Direct materials.
Yeah, started but not finished. Started but not finished.
Direct materials, that's where we're going at, right?
Yes, direct materials get transferred right from the materials inventory account into WIP. And then you add some labor in there. And then this is a little beyond where we are right now. That's chapter 3. But then we're going to apply some overhead. We've got to get all the, soap and the depreciation on the chairs and the supervisor and the utilities needs to all get captured in every single mouse we produce. How do we do that? We apply some overhead into WIP. And then when it's all finished, where's it going to go? Finished goods inventory. So there's 3 kinds of inventory accounts. Where does finished goods inventory move to when we sell it? It moves off of our balance sheet and onto our P&L into cost of goods sold. Period costs all go on the P&L. P&L and income statement, same thing, right? The books call it income statement. In the real world, we generally call it P&L. Okay, new concept, just another categorization. Direct materials and direct labor are known as prime costs. Direct labor and overhead are known as conversion costs. Pretty self-explanatory as to why. These are the primary items that go into any product manufacturing, primary costs, and you need labor and overhead to convert the raw materials to a finished good. So just know that. So if I say, what are the prime costs, I'm saying, what's direct materials and direct labor? What's your conversion costs? I'm asking you, hey, tell me what your labor and overhead costs are. New concept. Variable versus fixed costs. We are going to work with this all semester, so listen up. Every cost can be identified as either variable, fixed, or mixed. Every cost, product and period. But they behave differently. And it's really critical to know how your costs behave, because all of the decisions you make on your products are based upon an analysis of this basic classification. And just believe me on this for now. I'll make more of a case the more sophisticated we get. But really, most of your decision making is going to center on looking at data that is broken up based on fixed versus variable. So there's not a lot of room to kind of screw up this classification. A variable cost is a cost that stays the same for each unit produced, but changes in total based on number. A variable cost is a cost that stays the same for each unit produced, but changes in total based on the number. It's a cost that stays the same for each unit, but changes based on total number produced. So they're saying here, if you're looking at your, I don't know that I would use this as an example, but they did, so I'm gonna. If you're looking at your texting bill, and it depends upon what your what's it called, plan is. But if it's a per text charge, what's your texting bill if you said 0 texts? 0. So variable costs always intersect your cost line at the point of origin. Because if you have 0 volume, you've got 0 cost. Right? And say it's 2 cents a text. So for every text you send, what happens to the line? It increases directly with volume. If you send 1 million texts, how much is your cost per text? 2 cents. What's your total cost? You send 1 million texts. $200,000. Right? Okay. So if I'm producing wind turbines, what are some examples? I really wish I could write. What are some examples of costs that are variable? Materials. What kinds of materials? Yes. Yes, exactly. Good. So wind turbines, what are some examples of variable costs that stay the same per wind turbine, but are going to vary based upon how many I produce? All my direct materials. And you probably got a materials list, right? You need, blades, and you need an engine, or a motor probably. You need a nacelle, that's the kind of the nose piece. You need the stand. You need bearings. Okay, so you're going to have a raw materials list. And let's say that it totals to, $15,402. So your direct materials for one wind turbine is $15,402. Does that change depending upon if you make 1 or 1,000? No. So how does it behave? Variable costs stay the same per unit produced, but change in total. Fixed costs. Oh, I'm sorry, let me do one more thing up here. So what else is variable? Direct labor. Each of these have to be sub-assembled, then they have to be assembled in totality. And when you add up the costs of all the different workers that directly work on assembling and sub-assembling, it comes up to $8,111. So for each additional wind turbine, this is the cost I incur for direct labor. What about overhead? Variable? Some overhead's variable. But that's not going to stay the same per product. What kinds of overhead's going to be variable? In other words, change in total, but stay the same per unit produced. Absolutely, indirect materials are clearly variable. So again, you know, what do we have? Solder and wiring and casings. They're not easy to trace, but for each unit that we produce, it's going to be, within a litmus, a set amount. Indirect labor is also a variable manufacturing overhead. And then there's a whole nother slew of items that you just need to think about. For example, electricity in my factory. I incur 6,200 watts to produce one wind turbine. So that cost remains the same for each turbine, but changes in total the more turbines I make. Right? So oftentimes, some of your utilities. And there's going to be other examples that we're going to come across. The question you ask yourself is what? If I say to you, is this element of overhead variable or fixed? What do you want to ask yourself? What's the pivotal question?
If it directly is related to making them.
Well, you're not even in this category, Jess, unless you've been able to answer affirmatively to that question. So let me just reiterate what she just said so you understand. I asked, if I give you an element of overhead and ask you, is it a variable cost? What question do you ask yourself to ascertain that? And Jess said, well, is it directly related to manufacturing? Well, that's not the answer, because it wouldn't even be overhead if you hadn't answered yes to that. My question is it variable? What do you ask yourself?
Does it stay the same per unit?
How does it behave? Does it remain the same per unit produced? If I make one wind turbine, my electric cost is $1. If I make 1,000 turbines, my electric cost is $1,000. It remained the same per unit, but went up on a linear fashion with volume. Okay, versus, so funny, I completely forget that I've got the old-fashioned marker. I'm like, oh, it's like, oh no, I can really just right up here. Actually quite empowering. Now, let me also say something. Can you have variable costs for your selling and admin too?
Yeah.
Like, what would be an example of a variable selling expense? Yeah, shipping costs, great. Each wind turbine, and this might get a little tricky, but let's just pretend that to go to Tennessee or Chicago is the same cost. I mean, I don't want to quite get into that yet, but shipping costs remain the same per unit and increase based on the number that I ship. Another really good example of a variable selling cost is commissions. For each one that I sell, I pay an additional $1,250 commission. Admin, those are things like order processing costs, customer service costs, some of them. This gets a little trickier. I don't want to spend a ton of time here, but anything, again, that for each order I process, I cost X. For each customer that I service, it costs X. Okay, variable costs. So there's not just variable product costs. There's variable period costs too, aren't there? Okay. Versus, everyone have this? And I know that I'm shoving a lot down your throats, but you're going to go home and think about this and reread and do homework that's going to reinforce it. Versus fixed. A fixed cost looks like this. If this is dollars and this is volume, a fixed cost looks like this. It doesn't change depending on volume. So it behaves exactly opposite of a variable cost, doesn't it? It stays the same regardless of volume level. And don't get into calculating fixed costs per unit. Because if I have to pay rent on my factory, and it's $10,000 a month, and I produce 0 wind turbines, what's my bill? 10 grand. If I produce 1 unit, what's my bill? 10,000. So then you're saying 10 grand per unit for fixed costs? Does that make sense? What if I make 10,000 wind turbines? 10,000, it's $1 per unit. So we don't quote fixed costs on a per unit basis because that's irrelevant to decision making. You've got a $10,000 bill regardless of production level. So the way we identify fixed costs is they remain the same and are not dependent upon production level. And we can have fixed costs for manufacturing overhead. Like what? I guess I just gave you one. Factory rent, right?
But, for instance, you can go instead of, let's say your factory, instead of having how many calls and how many lines go out on a telephone, you can just have a one size fits all, whether you make 1 call or 15 calls, your price is $15 a month.
Yeah, that is a fixed cost. Yes, ma'am. Is that what you're describing? Yeah.
So just out of curiosity, so if you're on a fixed cost, like you're saying.
Yeah.
Machine goes down.
Yeah.
5 hours, so you have your employees doing maintenance work or whatever,
Sure.
and you're still paying them. So could you just reroute all that labor? Because now you're going to need an additional 5 hours to make up for manufacturing.
So you're actually getting into an. I think I would probably throw those 5 hours of downtime into overhead,
So you just
indirect
reroute.
labor. Good question. Fixed selling expenses is like the cost of your sales supervisor. She gets 80 grand a year. It doesn't matter if you sell 1 wind turbine or put up, Judith Dam, right? Fixed admin, cost of your CEO, cost of the corporate jet, blah, blah, blah. So again, fixed costs can occur in both period and product environments. Then they talk about lots of things to talk about. Something called relevant range. So really the way fixed costs behave is in chunks of committed dollars. What am I talking about here? My factory has got some limit beyond which, once I hit that limit, what am I going to have to do if I want to keep producing wind turbines? Get more space. And then all of a sudden my costs jump up to $18,000 a month. Right? Once I produce 2,000, I'm out of room. So you see what I'm saying? These are really called step costs. So really the way most fixed costs behave are in steps, in chunks of committed volume. So what the book says, and which is absolutely true, fixed costs aren't really fixed in perpetuity. They're fixed in something called the relevant range. In other words, once we run out of space, you got to pop up and lease more factory space. And you're not going to lease 2 square feet. You're going to lease another 20,000 square feet. What's a mixed cost then? It's both. It's got an element of each. Okay, so let me just say this. Every cost is either variable, mixed, or fixed. And all of our mixed costs, which have a component of fixed and a component of variable, have to be broken down into those 2 components. Non-negotiable. Again, because we're going to use all this for predictive purposes, to help us look into the future and make decisions. Mixed costs are going to look like this. What's different between the mixed cost and the variable cost line? It doesn't start at 0. So what is this? That's the fixed component, isn't it? Very good. Very good, Gretchen. This is the fixed cost line, the fixed cost component of the mixed cost. So this is your total cost line, right? This is the fixed portion of it. Therefore, all the stuff in here is the what? The variable portion. An example of a mixed cost is your electric bill, your sewer bill, the old-fashioned landlines. You have X cost per month regardless of production level or usage level, and then per cubic, whatever, gallon of waste, per kilowatt, per phone call, long-distance phone call in the old days. Those were, that's the variable component. So you must be saying, oh my goodness, how do we break these mixed costs down into the fixed and variable components? So the last 10 minutes, that's what we're going to be working on. That's what your homework is going to kind of dial into. There's 3 methods for breaking down the mixed costs into the fixed and variable components. Let me see if this is going to work, and if it is, great. If it's not, fine. Well, that's not the end. Didn't you guys read about breaking down mixed costs in your chapter? Okay, I don't know why this is. This is the end. That's not the end. Okay, so there's 3 ways to break down mixed costs. One is called a scatter graph. And it's kind of a quick and dirty way of doing it. It's saying, let's say you pick, why don't you write this data down? January, February, March, April. And we've got, let's say we've got maintenance costs. Well, Yeah, but I want to give you some other numbers so you got more than one. Let's do auto costs. And my auto costs in January were $1,022. In February, there were $894. And in March, they were $1,414. And what do you think determines the amount of my fleet costs of driving my car for my company? Yeah, gas prices are going to feed into it, but it's probably miles driven, right?
Yeah, okay, a percentage, I mean, per mile.
So the miles driven were 19,200 in January, 16,000 in February, and 29,000 in March. My first question to you, and I'm going to give you just a second to think about this, is this fixed, mixed, or variable? And tell me why. Are these costs that I've written up here fixed, mixed, or variable? And tell me why.
Because it's based on the miles driven, so if you don't drive it.
What would it look like if it was fixed? What would be in the dollar column? Same amount every month. Be a grand, a grand, a grand. That's what a fixed cost is, right? So is it fixed? So if it's variable, how does it behave? No.
Well,
It stays the same per unit. Have you proven to yourself that this stays the same per unit? Well, you better do that. Do these costs stay the same per unit?
Do companies estimate a fixed cost when there will be variable to guess where it will be?
Okay, can you give me, yes, certainly, and that's what the predictive power of this is. So if something's fixed, I'm going to go ahead and estimate my forecast next year based on that. If something's variable, I'm going to figure out how much do I think I'm going to produce, and then what are the variable costs per unit, and have you proven to yourself whether this is variable or not? Why isn't it? And what did you do to prove? A little division. What was your little division?
We'll take the miles driven divided by the cost.
Other way around.
Oh, sorry, yeah, the other way around.
Find the cost per mile.
Per mile, right.
Cost per mile. If it's variable, the cost per mile is going to be what? The same. Is it? No. 1,022 divided by 19,200 gives you something. 18 cents? Well, whatever. It gives you a number that's not the same as 894 divided by 16,000. Sorry, Chris. So it's not variable. It's not fixed. It's not variable. Therefore, it's mixed. It's got to be mixed. And if it's mixed, what do we got to do? Break it down into the fixed and variable components. And this should totally make sense because a car is going to have a fixed component. You've got to pay license plates on it. You've got to insure it, right? You've got fixed costs, but then it's also going to have a variable component of an amount per mile for gas and oil and maintenance, right? How do we figure it out? Well, quick and dirty method, scatter graph. My volume's always down here. My dollar's up here. In this case, my volume is miles. And I'm just going to do this super quick because we're kind of running out of time. But I'm just going to kind of plot where I think I'm going to plot these guys, and then I'm going to draw a line through it that looks like it comes closest to all of them. It's a super rudimentary way of doing it. And that's my total cost line. And we know that this is what? Fixed, and this is the variable. And I don't even really know why they still teach us, because nobody's sitting there drawing graphs on their notepads to estimate cost structures. What we really do, this is called scatter graph, and they call it the quick and dirty or something in the book. But what you really do in the real world now is you probably go into Excel and use linear regression analysis, which is a function in Excel. Or what you're going to be responsible for in here is something called the high-low method. And the high-low method is going to give you the same results as linear regression. And basically the high-low says you take the difference in cost divided by the difference in volume. And that is your variable cost per unit. So you pick your high and your low. I've only given you 3 pieces of data. So what month is my high and what month is my low? March is my high, and February is my low. And I mean, in all honesty, you'd have 12 months worth of data here, but we're just using 3. So what's going to go in my numerator? What's the difference in cost? What minus what? The big minus the little. And the difference in volume is what minus what? So what's the variable cost per mile? 4 cents. Okay? Whatever this is, 520 divided by 13,000 equals 4 cents a mile. So how am I going to get my total cost line? Total cost equals what plus what? Fixed cost plus variable cost. Right? Anybody remember from algebra what your formula for a line is? Okay, so now, let me just turn this around then so it's congruent. Okay, so what do we know to start filling in the line? Do we know what Y is? In other words, total cost? Yeah, sure we do. It's right here. So pick any of these. Let's just pick February. M is what we just figured out, right? The variable cost per unit. And X is what? Number of units, 16,000. Solve for B. Tell me what the B is and then tell me what it is. I mean, give me the number and then tell me what it is.